and Co's subsequent withdrawal of its credit rating have renewed concerns about credit risk in Nigeria's debt market. And to unpack this, I am joined by Oladipo Ajayi, Head Fixed Income and Forex, Chapel Hill Denham. Thank you so much for joining us today.
Good morning. Thank you very much for having me here.
All right. I remember when the news broke, we spoke about it, and you said you would be looking forward to hearing what the company has to say. They've released a statement. So how did that come to you? Did you hear what you wanted to hear?
But the statement they released was very blank. There was nothing touching the subject matter. It was just vague. And for me, I think they allowed the rumor to actually linger too much. And so I was expecting them to come with a concise release that will, one way or the other, douse the pressure. But what they released is not enough for me because they were just walking around the issue, and there's nothing direct about the default. So I think they have more to do around what was released.
Okay, so I actually came across a particular interview involving an auditor, Farouk Yusuf, and that's the managing partner, Geregu Co. I'm going to just read out what he said. So he was saying that the bond was issued for the acquisition of a power plant, which didn't scale through.
Was true.
And then that particular money was then kept in an escrow account, you know, where it was just supposed to stay and all of that. And then he said that, let me use alleged. So he alleged that at the July 28 payment date, the new management sought to pay from the restricted account, which is escrow account, only to realize that the money in the escrow account had been utilized.
So for me, I saw that interview also, and that's one of the reasons why I said that the managements were, their release was never precise enough to actually douse a lot of rumors that were just going around. And
should we believe that interview?
So when you look at what he said, truly, when the bond was raised, they were not able to make the acquisition. Of course, so what is expected is for you to keep the money in an escrow account. One of the reasons is so they can yield returns while you are using that to defray your obligations. And it says something very pertinent that when they got in July, when they were about to pay, they found that there's no money in their accounts.
So who took it? Who cleared it?
The transfer of ownership was done December 2025. The first coupon by the new management was paid in January. So I also need to have an understanding where the management paid the January coupon from, and the part payment for the principal as well. It was done in January. Because it's a January and July bond. So I also think that that's one of the reasons why I said that the management needs to do a comprehensive release around this thing so that you will not allow people, because one thing is that the confidence for corporate credits has dropped significantly on the back of this. And it's just so unfortunate that the rating agencies too has come to actually distance themselves from the crisis. And I remember, so what this is also telling us that the rating is not enough for enough justifications for us to invest in an instrument.
So what should we
and I think the first thing that is just so coincidence that the first time this thing came to bear was on the Enron case in 2001, while a company that's an investment grade company, it was an investment grade company until 4 days to the filing for bankruptcy. So it means that what was the rating agency looking at over that period of time before that happened? And here we are also on Geregu issue, where a company woke up one day and felt that we were unable to pay. And what is very, very concerning for me around Geregu is the fact that you declare a dividend to ordinary shareholder, 9 naira per shares. That culminates to about 25 billion or thereabout that you actually paid in June. When you know clearly that there's no fund sitting in that escrow account, why would you make a payment of about 25 billion to ordinary shareholder? The ordinary shareholder bears the first risk of a business because you are the owner of the business. So it means that the bondholder rank above the ordinary shareholder in this regard. So I was surprised that you paid dividend in June only for you to default in July. I also don't forget that just recently the federal government paid the Gencos. About 333 billion were paid to the Gencos. Are we saying that no money was paid to Geregu?
They were one of the signatories to that.
That's what we say.
Stuff.
And as we speak currently, The federal government is also in the market again, raising about 729 billion to pay Gencos. So even if you know that there's no fund, the management should be forward-looking to the extent that you can approach a bank, get the line, draw down on the line, make good your obligations so as to protect the name of the organization.
Maybe there is more than meets the eye.
Exactly. And that is why you don't leave stakeholders in the darkness in issues like this. Because when issues like this filter too long, it causes a lot of crises in
now,
the economy.
let's leave Geregu now. Let's just talk about, the conversation around financial ratings and assessing a company. I mean, where does this leave us really at the end of the day? Because we know that we use, historical financials to sort of assess a company, whether it's for credit or even for investment and all of those things. So what do we do moving forward now?
I think one thing are
the financials separated?
I think there's one thing that I also learned from this crisis, the fact that we need to reassess risk whenever there's change in ownership. Because sometimes the rating still remains the rating pre the change in ownership. During merger acquisition, a lot of things happens. You understand? Matching books, because you are acquiring assets, you are acquiring liabilities. And so I think that post-acquisitions or post-merger transactions, I think that the rating agencies need to look at the book once again. And at that particular point in time, you don't necessarily need to rely only on the auditor's statements. You need to carry out investigation. You need to ask probing questions. Like the case of Enron that I mentioned earlier on, the allegation against the rating agencies was that they never asked probing questions. They rely only on the auditor's statements. And here, that happened in an energy sectors. And now this is another energy sector participant that's going through this. So I think that normally beyond rating agency, there are other factors that you also need to actually factor. But just that the rating agency, one way is that they give you the first pointer to how you price an instrument. When you are seeing an instrument that is AA rated, you felt that, oh, this is an investment grade instrument. And so the credit risk is minimal. And I think another thing is that rating agencies focus so much on credit risk that they overlook the liquidity risk. Because you can look at this company has capacity to pay, but does this company has the cash flow to pay? Because sometimes there is, you see, profitability and liquidity, there are two key things that is driving business. One is driving you to the other side, the other one is driving you to the other pole. Company who wants to make more money, when you want to make more money, there's every tendency that you overutilize your cash. So you're not sitting on heavy cash. So if you could be doing very well, but if you cannot meet your obligations as when due, yes, good. The business is as good as finished. And that's why liquidity is also king in business. And we have seen this in the case of Geregu now. The company could have a very good future. But if you cannot make good your obligation as we speak now, of course, there may not be future. And that's why most of these rating agencies also need to look beyond the line while they are actually accessing most of these companies.
Absolutely. I think this is a fine place to end the conversation. Thank you so much. Oladipo Ajayi, Head, Fixed Income and Forex, Chapel Hill Denham. Thank you for your time.
It's always a pleasure to be around.
All right, that's it on this edition of Business Edge. Many thanks for watching. I am Perpetua Fasami Peter. Do enjoy the rest of the day. Bye for now. Up next, the 12 report.